thanks very much. Chicago Fed President Charlie Evans making one of the stronger criticisms of trade policy that a Fed official has made. He is warning that trade tariffs, along with immigration restrictions, could lower trend U.S. growth for the long term. In fact, he says trend growth in the U.S. could end up being closer to 1.5% compared to 1.75%, or even lower because of such policies. He says trade policies increases uncertainty. This is the near-term effects among the business community. Longer term, however, you have tariffs in place. You limit competition. You can reduce productivity and reduce innovation, and as well as the motivation for firms to innovate. He also points out that restrictions on legal immigrations could reduce labor hours. You know, the productivity and labor hours are the two key components for determining GDP growth. International trade, he says, expands economic opportunities. So, Sarah, there's somebody from the Fed who is giving the economic case for having open and free trade.
So, and he's a voting member right now, correct, Steve?
I believe so, yes.
So, is he a cutter? Is he in the cutting camp as well?
He wants to cut rates. Charlie's been very worried about inflation and also very sensitive to the weaker economic data out there. You also know that being in the Chicago district, he, by the way, is giving a speech at an auto conference. So he's going to be very sensitive to manufacturing, the auto sector. And there was a key component last week, the Chicago Fed's Midwest component, Midwest manufacturing index, that showed some weakness still over the last several months.